Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? All right, so we have a lot to talk about today. Really, a lot of updates that we're going to have to go through and kind of parcelate through. Um, so we're just going to get at it. We're going to talk about institutional ownership going up for the first time, 26%. We're also going to talk about, how it's like, I would say divided. I would say maybe 80% of people are excited. 20% of people are like cautiously optimistic. They're scared. Again, they're retail investors. They have perspectives that make sense if you ask, but it's just a very funny way of interpreting things. So I'm going to go ahead and talk about that as well. But overall, the market did pretty good today for Clover Health. We're up 37.9%. The highest we were up today was $52,000. So we're up 52K at some point. I do believe, as of right now, institutional investors are positioning themselves to acquire long-term positioning for Clover Health. Now, with that, there's going to be some times, as you can see, from stocks like I would say SoFi or other stocks where they go from $17 down to, they drop 50% in value, right? We are going to see that, guys. We are going to see, like, imagine them going to $9 back to $4, right? So what's going to end up happening is, I'm going to illustrate this when I bring the iPad. We're going to have an iPad discussion. So I'm going to go ahead and write this down if someone can remind me to do selling retail bad graph. I'm going to just kind of show you that. I'm going to draw that out because I know pictures say 1,000 words, right? But without further ado, what's going on, Shant? How are you doing? B-Rad, Cooley, what's going on? Master Q, what's going on? Good. Let's see here. When Moon, yes, CMS knows the answer to the question. I believe so, but sometimes you just have to help, right? I agree, 30 to 40% drop after hype run. Absolutely. We're going to get that. And I'm going to explain to you what's going to happen because it's always going to happen. And even if I say it's going to happen, it's going to happen still, even if you try to educate, right? It is what it is, right? So with that, let's go ahead and run through our analysis. So we're up today very well. Very nicely done. Up $558,000 up to the $1 million portfolio. I believe that this will continue increasing. The VIX today is down 3.31%. I am very excited when the VIX is down. It really, the past 5 days. Hold on for a sec. My dog's crying. He just sees his big brother's coming up. It's the white dog. When his big brother comes, he gets excited. He starts crying. He's like, I love my brother. I miss him. So, it is what it is. Well, what am I going to tell him? Shut the hell up, right? He loves his brother, right? So, 5 days, we're down 11%. 1 month, we're down 47%, which is good, right? 6 months, still up 10%, but still year to date, we're down. That's all that matters. 6 months is you starting to enter last year. But overall, the VIX went up above 50. We're actually at a 52-week high of 65. Then it dropped to 17. For all the people that don't understand, VIX is a volatility index. The higher it is, the more fear and uncertainty is in the market. Now it's dropping. There was a lot of concerns. A lot of retail investors were, concerned regarding the VIX. But now ultimately, dumb money is coming back online. Now, I do have to admit, as the overall sentiment increases, or not even sentiment, as the overall confidence metrics and from institutions are increasing, and as you can see, the stock price pretty much reclaiming its new all-time highs. We had a really interesting double A, the AAI investor. Michelle, be careful. Yeah, Michelle's here with. Sorry, guys, I'm doing this live, so just lost a little train of thought there. I'm going to give you this graph here that's going to tell you how it is. So, what I find interesting is that the AAII, which is just talking to retail investors, they were incredibly bullish. So they were incredibly bearish. Very bearish. The past couple of weeks, they were bearish. They felt like the ceiling was going to fall on them. They felt like they're going to lose all their money, and that's it. We're going to pretty much go on food stamps and we're just gonna, that's it. We're done, right? We're gonna go under the rate, buy gold, sell everything, right? And unfortunately, retail investors are not the people that you want to look up to, right? If you want to look up to, you got to look at people that are wealthy. And personally, I look up to Wall Street in terms of what they use, and I use the data that implement, that copies Wall Street, right? So I don't follow the AAII. In fact, it's a contrarian indicator, and I don't know if these people understand that they're dumbasses, but unfortunately, we can record their stupidity. So what I'm trying to show you here is this is the graph, and this is the bears, right? So when the graph is above the green line, it shows that they're incredibly bearish. They are not happy. And as you can see, 2020 is the pandemic, and you could see the idiots were bearish when it was a great time to buy. Same thing with 2022 when Meta was around $70, $90. Yeah, the idiots were bearish. And obviously now here when the stock price dipped, when the stock price dipped, the idiots were still bearish, right? But what I find interesting is we're approaching new all-time highs, right? We're approaching new all-time highs. Look how this new all-time high, and we follow it all the way down. We were actually down here. We're at 20. We're approaching new all-time highs, ladies and gentlemen, and we still have bears at 45. Finally, the bears are retreating away, So, the bears are finally, you're running away saying, right? But don't worry, they'll come back, right? But the thing is, they're retreating away. But even as the stock is nearing all-time highs, we still have about 45% bears. When in reality, if you were to go back to where it was here and drag it all the way down, we should be down here. So what does that tell you? What does that tell you, ladies and gentlemen? It tells you that the market and these retail investors are still bearish, right? They're still scared. They're still right? They're still bearish, which is fine, right? And that's good, because if they're still bearish, it means that we haven't topped out yet, which means that obviously we're going to consolidate down lower, but we're going to get to new all-time highs, and I think we're going to have a really bullish year, right? Given that the bears are still there, right? They just haven't been depleted yet. Okay, so there's that. Let me go ahead and look at the comments. I appreciate you. I'm Karen. Yeah, I know we really gotta, do that. Absolutely. Does anybody on here work? Right? Let's see. Al does CLOV full time now, right? I'm all in, baby. I'm all in, right? I'm gonna have to get into go back to the hospital soon, so my time will be limited. But still, right? As you can see, I'm all into the Al stock trades. I mean, what we did yesterday, Al needs to do a 24-hour live next. No sleep till Brooklyn. It's like that lady on OnlyFans, right? Instead of 100 or 1,000 folks, I'm just gonna do 100 hours of live, right? Just straight analysis, right? But I went ahead and I upgraded this now. Now, if you can see this little button there, right there, see that button? There's going to be two buttons now. You already know one of them. It's the Enhanced AI Analysis. Now we're going to add another button that I'm going to show you called Enhanced History, and that's going to be insane. I'm going to show you this right now. It's an update that we did. It took me literally weeks to program this, and I was like, last night, I was like, I've had it. I'm going to sit down here, and I'm not going to leave this damn desk until I program it. So I went ahead and programmed it, and I finished at around 3 or 4 in the morning. Michelle said 5 in the morning because I woke her up. I said, Michelle, let's go walk the dogs. She's like, you're freaking crazy. I'm like, no, I want to hang out with the dogs. And then she's like, oh, God damn it. So I said that word again, but that's what she said, right? So then we went ahead and then we went to walk the dogs, right? So there it is. Okay, is Al mimicking a scared woman waving her hands? I'm trying. Well, I'm trying, right? So, okay. Well, let me do the Indian headland. Okay, so, right. So now we have this Al running on caffeine, AC, and Jesus, right? All right, so now that we have this, let's continue with our analysis. So now that we know the VIX is falling down, but yet retail investors are still bearish. They're still scared. They're like, I don't like to lose money. I'm so scared, right? Well, now that the VIX is under 20, we can run an analysis. And usually when the VIX is below 20 and you go from 1986 all the way to 2025, the market does really well when the VIX is below 20 versus when the VIX is above 20. And this is a nice way of analyzing it. So obviously right now, just like this wig, breast thrust indicator, right? You could see ultimately that it has not failed us. It has not failed us. Okay. So we have that there. Watching Al is the dentist chair waiting to get a cleaning. Al is everywhere. Woo, right? I love it. Love Michael Jackson, right? Oh yeah, oh yeah, oh yeah. So now, what's going on with United? Let's go ahead and briefly talk about this. So it's up 6.65%, obviously on a sympathy rally from the article in regards to the Wall Street Journal. Still, year to date, it is down 42%. It is insane. It is down 50% now. Still crazy. Insider did do about a $1 million transaction. They bought Insider, bought around $1 million of shares. CLOV, obviously, year to date, up 13.74%. Incredible. Year up 282%. But in reality, it's actually up 429%. And it used to be up 600+%. Used to be a six-bagger. So we're going to go ahead and talk a little bit more about that. Humana up 4.77% year to date, down 5.65%. A year ago, down 32%. If you would have invested 5 years ago, you'd be down 40%. Obviously not the best investment. Alignment Healthcare is up 5.87% today. Obviously, doing well. 36% up on the year to date. 1 year up 125%. Still, beautifully done. Clover's outperforming. Now, ladies and gentlemen, I want to go ahead and share with you the power of the stock terminal. So not only do we have our premium stock terminal that has access to institutional data sets like a Bloomberg terminal at your disposal with a one-time payment, lifetime access for now, which is unheard of. Anyone who gets lifetime access will be grandfathered in, and lifetime access is passed down to your children because the people that are early investors, I want to create generational wealth because I'm going to be teaching you everything that I know, and you are going to essentially be able to be a master of the stock market and become a millionaire like me, right? Not just any millionaire. We're talking mega millionaire, okay? So now basically what we see here is that if we go ahead and look at this, I said, ladies and gentlemen, so you know how powerful the stock terminal is. We have a lot of third-party sources that we like to use. So before the, check this link out. Someone knew the fraudulent newsletter was leaking and made a golden sweep put option, earning hundreds of millions of dollars. So follow these signals because golden call for Clover will be showing up soon. Right? In fact, we should probably look for it. I said, remember, golden sweeps are unusual options activities that showcase a huge increase in options, historically bigger than what a normal retail investor could afford. So if you were to zoom in on here, it's in red and it's 5 large put sweeps, which is in the millions of dollars, right? So if we go ahead and look at the actual thing on May 4th at 1 p.m., you could see a lot of these put options were put on UnitedHealthcare, right? We're talking millions of puts, right? The question is, how did these people know? It happened literally right before the Wall Street Journal dropped their article. It shows you how manipulative Wall Street is. But guess what? You remember I showed you the golden sweeps for AMC? Then all of a sudden AMC dropped more than 90%, right? Because of dilution. What this is basically sharing with you is it's sharing with you any institutional investor out there that likes to activate the dark pools and likes to get something behind my back. I'm going to find where you are, all right? And we're going to find you and we're going to put you here, all right? And we're not going to let you know. It's that you can hide wherever you go. I see what you do. I don't care who you are, how many billions of dollars you have. I don't care how many years in the stock market you're in. We're going to find what you're doing, right? And we're going to go ahead and democratize this to retail investors around the world. Because a lot of people think, oh, this guy's selling another course. Okay, no, we're not. We are a data software company. We are selling data. The problem is I can just give you the data, but it's like going ahead and giving an airplane to a retard, right? I'm not calling you retard, right? But it's like go ahead and give an airplane to somebody else the street. What's going to happen? Unless that guy who, did a bunch of cartwheels and stuff before he passed away, RIP. But it's like you're going ahead and I, give you an airplane, which is what Robinhood is and Webull. You're going to crash. You're going to crash. So of course, giving you software and then going ahead and having you crash, what's going to happen, right? So that's why we have the course. Yes, we have the course, but we are a software platform and the course will help you use the software. But here's the problem. Courses are static, right? They get old, they get outdated. So you know what we do? We update the course. But not just that. We have a research edge where I essentially show you my research, okay, every single day. So not only that, you have positive feedback on how to interact with the data, how a professional who's, again, I'm not stock licensed or anything. I just been in the game for 15 years, right? 14 going on 15 years, right? How someone like myself looks at the data, okay? Now, again, I don't mean to call you guys, like the people that enter retarded, right? That's terrible, right? But I'm speaking to you from the perspective of Wall Street. Wall Street looks at all of us like retards, okay? So what they do is they try to be nice to you and they say, hey, you want to invest? Go on Fidelity, go on Schwab, go on here. We'll take your money. And then guess what? You lose your money, right? And then here we have Bloomberg Terminal fudging numbers. Well, there it is. What does that tell you? And I'm going to tell you right now what's happening right now. I'm about to tell you what Bloomberg. I'm about to tell you what these analysts are doing. There's a lot of dirty, shady stuff happening right now. Johnny here saying I'm a retard. No, you're not a retard. Okay, you're not. Come on, stop, retard. Okay, he's like, it's me. Now everyone, come on, guys. Okay, they're like no hard feelings, right? Listen, at the end of the day, I like to be honest and trust, and trustworthy. Okay. At the end of the day, you're out here trying to invest and swipe up and buy stock, right? The problem is you don't know shit about what outstanding shares are, market cap. Some of you do, right? But others that join our platform, they might not, right? So my apologies again for using the R word, but this is what Wall Street looks at you. This is what they see you. Right? This is how they see you. They're nasty people, right? The deadline to file an SEC 13F was May 15. And these mother effers, you know what these mother effers did? These mother effers filed it on the same freaking day, the same deadline. So you don't know. And I'll show you. The deadline was yesterday, and these mother effers filed it on the deadline because they don't care about you. They want to wait until the end. Before the lawsuits come in, they have to file that day. And you saw institutional ownership climb. Now we're at 26%. They own more than 100 million freaking shares. Okay? So, yes, we have a course, but it's because we're giving you data. And if I give you this data, you're not going to know what to do with it. You're going to be like, what the hell does this mean? So you need the course to teach you the data, and you need the research edge and the continuous soon to be, hopefully it's going to be weekly Zoom calls, and it's going to get to a point where it's going to be morning Zoom calls. You understand what I'm saying? It's going to be morning report where I'm opening up the camera. We're going to be on Zoom to all the lifetime access members, right? And you're going to see the beautiful beach behind me on the multi-million-dollar condo I'm going to buy because of the wheel strategy that I'm going to show you about, right? And then we're going to do this every morning, Monday through Friday. That's where we are heading to. That's where we are going. You understand? That's why the lifetime access is going to be expensive because this is expensive shit, right? So in any case, that's the thing, okay? It's like imagine giving some guy off of the street a freaking plane, go fly, right? You're going to crash. And how many people you've seen on Wall Street bets crash, right? I'm trying to help you, right? All right, so now let's go ahead and you can see these assholes knew something and they went ahead and bought puts and they made millions of dollars. These are unusual option activities. And yes, you have access to them. Yes, you have access to this data. Yes, you have access to this lifetime, and it's part of the stock terminal. You have access to this. I try to bring the best data from around the world, and if I can't find it, I'll make it myself. I know how to program. I learned how to program in an MIT open course where when I was 15 years old, I can go ahead and program this, okay? Someone always knows, right? So there it is. So now that we have this, and we talked about this disgusting Wall Street activity, these pieces of shit, right? Now let's go ahead and move on to this, okay? So now I'm going to go ahead and read this. This is a post. You can follow us at Al Stock Trades. I'm going to explain to you why I want you to follow us, because I went ahead and posted something in the CMS, okay? And again, listen, okay? Listen, my apologies again for saying the word retard. I did, I'm just like, I'm like, it's hurtful, right? Because it's like, I don't like using the word smart money versus dumb money, right? But this is what Wall Street looks at us. This is what they see. This is how they view us, right? They're looking at me and they think I'm a dumbass, right? They think that, oh, thank you. Look what Michelle gave me. These are Middle Eastern Palestinian Easter cookies for Easter. Nice. The tradition, Greek Orthodox. Okay, listen. Okay, these Wall Street people, right? They think I'm a dumbass, right? They think I'm a freaking dumb. So you know what they're doing on the Bloomberg terminals and between analysts and analysts? What they're doing is they're fudging the numbers, going positive 800 million and negative 700 million, right? Acting like I don't know how to calculate EPS. Yes, okay, fine. In the past 3-4 years, you haven't seen me calculate EPS because I knew we're not going to be profitable. Now we're getting there. Now I am calculating EPS. And they're like, oh, crap. He knows how to calculate EPS? Do you really think I'm a dumbass? You really think I went from homelessness to multimillionaire over $15 million? You really think I'm a dumbass? And you really think I'm going to lead my subscribers to the freaking slaughterhouse? Screw you, Wall Street. Screw you. Right? And I know they're watching. And you should see the followers we have on our stock trades. I can see because I have premium. I can see every time they watch my portfolio. We're getting analysts from everywhere, even the analysts that are watching Clover Health, and they're on the analyst phone call. This is a very nasty game what these people are doing, right? Because they want your shares. Don't you get it? And I'm going to prove it to you with this simple thing, right? I'm going to go ahead and prove this to you, and I'm going to read this tweet I went ahead and posted. Okay? I swear, my blood pressure's up to the roof right now, right? So, okay. So, Wall Street quietly stacking Clover shares. Let's read. Okay? Morgan Stanley increased their position by 41%, right? 41.06%, but I'm going to say 41%. Now holding 2.23 million shares at an average price of $5.27. They're holding the bag, but they're increasing, so they're averaging down, right? Citadel Advisories boosted their share ownership by 90%, right? 90.28%, right? Now owning 1.73 million shares at an average of 3.75. Bank of America surged its share position by 344%, now holding 1.26 million shares with an average price of $4.09. What I want to highlight is, Bank of America. I want to highlight Bank of America. Okay? Why? Let's read. I'm going to highlight. First, let me drink some coffee. Okay? This is what pisses me off. I want to particularly highlight Bank of America since they had their healthcare conference and they already are buyers of Clover Health. Which you can see right here. They were buying Clover Health right there. Okay? You could see the discrepancy in the unfortunate bias of Wall Street. They love Clover Health so much that instead of issuing a price target to let retail investors know, they were secretly buying back the company as they know it's about to explode. Once they're done eating and slowly taking shares from retail investors, they will release their stock price. Do you understand what they did? Do you understand what these guys did? They don't show up on the earnings call, right? They don't issue a price target. But what they do is they, from far away, review the financials like how I review the financials and how I teach you, okay? And let me just go ahead and say one thing, okay? Go ahead and go talk to Eller. Go talk to Eller Business School and tell them, who is Albert Allen? Did he teach the executive MBA people economics and finance? You know how many business majors I taught? You know how many I taught about this? How many VPs and presidents, even publicly traded companies that went through the Eller team? You know how many I taught? I know how these people think, right? I've been gifted by God to be able to take complex sheets of information, break them down to first principles, and explain it in a dumbass way, right? Because I used to be a dumbass because I started from homelessness, right? And I was given a gift to translate this complex world into dumbass language so my dumbass can understand, right? And then I became a master, right? So I know how these people think, right? I taught a lot of them. And now I'm teaching you. So you know what I find interesting? What I find interesting is that Bank of America buys shares secretly. They don't show up on earnings calls. They don't issue price targets, but they go ahead and just bought 1.26 million shares. They go ahead and drop about, hold on. They go ahead and drop about 5.15 million. They drop $5 million in Clover. And guess what? They're going to continue going. They're going to continue increasing. They're going to continue buying more. They're not going to let you know because most people don't know what an SEC 13F filing is. They don't know what 13F. Do you think retail investors know what a 13F is? They're going to think it's a gang called MS-13. That's what they're going to think. I mean, literally, Andrew was just at the meeting, and you saw, he's like, well, you know, it's kind of funny. Everyone's retreating, and you're going in. Usually Clover Health zigs and zags. Screw you. Screw you. Right? So why am I upset? Because I tried. I tried giving you the data. Right? I tried spending hours, over hundreds of thousands of hours here, sitting my ass down, talking to you and teaching you. I tried. So you know what I did? I said, you know what? I'm going to go ahead and I'm going to make a freaking cartoon. So I made this cartoon. I don't know how else I can teach you this, right? The little fish is us. We're the little fish. Okay? They got over millions of shares. Again, I have a lot too, right? But I have about 400. I have over 400,000 shares, but not like them. They got more than me. This is us. This is retail investors. This is your hand that you're cutting off. And you're giving them the shares. How do you think institutional ownership went up to 26%? Where did they get the shares from? Don't be stupid. They got it from retail investors. They got it from you. Where do you think they came from? The sky? They got it from retail investors selling. So here are the small fish, and they're giving them to this shark. And you know what these sharks say? Yeah, give me your shares. Give me your Clover Health shares. Don't listen to Al Stock Trades. He doesn't know what he's talking about. And soon you're going to see retail ownership decrease and institutional ownership increase. Someone said, Al, he's like, I didn't sell anything, Al. Stop screaming at me. I just get heated up, okay? Because this is really annoying because you know what's going to happen? Clover's going to go to $8, $9. Then it's going to drop down to $4, $3.98. And everyone's going to be like, oh my God, I'm going to go ahead and sell at, I should have sold at 8 and bought back at 4. Then it's going to go up to 8 or 10 and go back down to $4.50. People are going to sell. And as they sell and as the stocks go down, what's going to happen? What's going to happen? These retail investors are going to hand out their shares. And these sharks are going to eat them. And you know what's going to happen? You're going to see institutional ownership start to increase. They don't like me. Wall Street doesn't like me, right? Because instead of just putting my head down, knowing this information, working under them, and making money and sipping my pina colada on my multi-million-dollar estates, I'm like, screw that. I want all of you to be wealthy. And you can see, look at your portfolios. Look at your portfolios. Look at your Palantir gains. Look at your HIMS gains. Look at all your Clover gains. You haven't seen shit. Right? Someone said, Michelle, turn down the AC. No, she already turned it down for me. It's going. It's blasting. Oh. She gave me a cookie here, Middle Eastern cookie. Let me see what the hell's going on here. Mm. Mm. Oh, you can't see it. It's green. Oh, it's pistachio. That looks like shit, guys. Seriously. Trust me, it's not black. It's green. It looks like black on here because it's the green. Yeah, you can see through the stock terminal. I'm eating the stock terminal. Watch. Let me see. You see the stock terminal? I'm eating the stock terminal. It's in me, right? No, these are pistachios. They're green, so they can't. You can't see them. Someone said that's disgusting. No, trust me, it's not black, guys. It's not black. It's just everyone's like, what the hell is there? What the hell are you eating? They're looking at me like, what the it looks like? Seriously, it looks like doo doo. Well, you want to see? Okay. Damn, guys, hold on. This tastes very good. Hold on. All right. No, not figs. Is there figs in here? There's a date. Which one's the date? I don't want to open it though, because I don't want to open it. Well, I mean, the thing is, the dates are brown. Then they're gonna think I lied to them. Like it's all brown, right? Only the Middle Easterns in here are gonna understand. All right. Let me see here. Let me see.
Now, the real ones listen and have been on the journey for years. I started at $8. Average sell way down to 80 cents. Average now $1.2. You don't sell this at if I win. We go and say.
Ruby said sugar and high blood pressure. Don't get a heart attack, Al. We need you, bro. I'm sorry. I'm gonna calm down. Start a mukbang. I should start a mukbang, huh? Get a whole bunch of food and start eating it. This is real good. Pistachio mamul. Us, my side of the Arabic world, we call this kleche. Kleche. That's what we call it. But all right. Wash my hands. All right. Like what's his name? Bloomberg. I'm gonna go ahead and work out, guys. Seriously, these are homemade, so it's pretty good. This is too much, babe. I can't eat all this. This is good. Thank you. All right. So all right, back to this one here. All right. So
I'm just finishing with a big tub of shady finger. Cookies with black caraway seeds. Banana, not sweet.
I love it. Oh, need Turkish coffee. Well, yeah, I got the American one here. Need to know. Have an Al Jr. No, yeah, I have to make one first. The one that I have now is just the dog, but he's pretty smart though. He knows how to press the enter with his nose on the intrinsic value. So yeah, guys. I mean, honestly, guys, look at this, guys. Just look at this, right? I mean, are you seeing this? Right? What happens? What happens? Okay, so now we got 250 long, 250 total, 243 long, 0 short, and 7 having a call to put. It's like a straddle, right? So institutions now own 26%, 26.04%. They own about 107.8 million shares. So that's a lot. So they keep buying. And like I told you, Clover Health bought $18.2 million of shares. Then instead of basically selling the treasury stock from their taxes that the employees have, they kept their stock and treasury shares, and they use cash to offset that because they know their shares are expensive. So. But you know what's sad? Even with this knowledge that I'm giving you, this is what some retail investors are saying. I don't think that is a big number for holding for B of A. Okay, I get that. That's fine. Then someone says, how do you know these aren't just what banks are holding on behalf of the clients? It doesn't work that way. Okay. Now, of course, if clients are wanting to buy Clover, they could package it up in some form of institution. And that's what Sandra was alluding to, right? But it doesn't work that way. These are institutional investors buying Clover Health as a part to getting it undervalued. Because if it's let's be honest, if it's true that Clover wasn't valuable, then why would these institutions buy it? Everyone wants to buy AMC, right? Retail investors want AMC. Why is you know what I mean? Like look at the institutional ownerships. Okay. And they're telling me I should name my son IVC. I like that. What's up, IVC? Right? Yelled by the teacher. It's so funny. Yes. So with that, we talked about this. We talked about the cartoon. We talked about this. Just a big shout out. We went ahead and we just posted a community tab platform. Here you'll be able to input your triple dragons and emerging dragons, and they'll be nice. It's almost like a Twitter, and it's private only to lifetime access members. So you'll be able to use the stock terminal and its data to input this. Okay. One thing here, I want to share a major upgrade. Now you have access to over 70 years of financial information. And you're able to input any ticker symbol you want, and it'll analyze and do an AI summary and enhanced AI analysis. That's number one. So you're able to now see patterns and detect patterns when Amazon went from negative to positive free cash flow, when Apple went to X, Y, and Z. That's number one. Number two, the enhanced AI analysis now is a lot smarter. It analyzes a company like almost like a financial seasoned advisor, right? Obviously, we're not financial advisors, but it does it in a methodology that is very similar. I'll explain. What it does is that instead of analyzing Q4 2024 to Q1 2025, it actually does Q1 2025 and analyzes it between Q1 2024. That's incredible. Okay. So that's very good. Now, the caveat to this, and this is intentionally done, is that it's not going to list all of the changes. Now, we can have it list that, but that's going to be signal noise. I don't want signal noise. Yes, if you want to know how much it increased year over year, you can calculate that on your own accord. But our strategic enhanced AI analysis software, what it does is it graphs the growth. And if there's a surge in growth, it detects that surge algorithmically, and it signals to you in the enhanced analysis. And it says, listen, this is a different increase that's not like before. Pay attention. Something's changing. Okay. Both for the good and for the bad. I'll show you now. So we're going to take a moment to show this. So I'm going to go ahead and I'm just going to actually push this here. And I'm going to show you this one thing here. Give me one moment. I don't know why it's showing me. Okay, so lots of work, man. This took me many weeks and just literally overnight just to do. All right, so let's look at Amazon. Okay, you go ahead and look at Amazon now. Okay, when you look at the enhanced AI analysis, you can see 2021. You know, there was moments of negative free cash flow, right? Now look at extended history. If you look at extended history, now you have data from 1996 all the way to obviously 2024. Same thing if you want to do quarterly, but let's look at that. So you could see overall the information here, and you could see beautifully the graphs. Now what I want you to look at the AI analysis. So I'm going to go ahead and I'm just going to zoom in here. Okay. So operating cash flow turned positive in 1997. Free cash flow turned positive in 1998. and net income turned positive in 2003. So let's look at 1997. So 1997, the stock was around 21 cents. In that, obviously, it was pre-adjusted, but for the purposes of this discussion, it was 21 pennies. Now, of course, in 1997, it turned positive. So what happened right when it turned positive a year after? It went from 24 pennies to it went up 279%. It went all the way up to $3.51. So essentially, it went up. It went up about 1,571%. So it went up 1,500%. It was a 15 bagger. Okay, I got some. Oh wow, that sucks. I got some dessert on my keyboard. Hold on, let me clean this. I have OCD. Let me explain this. Okay. One moment here. Okay. I just cleaned it up. Okay. So back back to the analysis. So in 1997, and then in 1998, it was free cash flow positive. So that's what happened. So it was 21 pennies. And then let's look at 1998. So let's look at 1999 after everyone figured it out. Right? We're at $3 and $4, $5, right? But then in 1999 it turned negative. Right? They turned negative. But then in 2000, so they turned negative. So what happened right after they turned negative? See how it went up? It went up all the way up to $5, but then they turned negative. So then it started dropping down to $2, right? And then all of a sudden the dot-com bubble crash happened, and now we're back to pennies, 50 cents, 45 cents. We're back to 34 cents. Literally 10 years ago we're back to the same price. It dropped. A lot of retail investors sold because that's what they do, right? They have PhDs in losing. Okay. So then what ended up happening in 2002, operating cash flow turned positive and free cash flow turned positive. And then in 2003, net income turned positive. So literally in 2002 and 2003, they pretty much got the triple dragon. Okay. So let's look at what happened after 2002. So they were like literally back to 30 cents, 45 cents. So let's look at what happened after 2003. They turned positive. They turned profitable. The market's still recovering because they think tech stocks is bad. And Michelle, can you plug this in? I think the dog's. Was that dog? Just fell. The power bank fell. So, do you need some help? It's in there, babe. All right, good. Power's in. I don't want the computer to. So in 2003, it turned positive. So let's see what happens in 2004. So as soon as it turns positive, minimal movement, literally nothing. Minimal movement, absolutely nothing. $1.60. I mean, literally minimal. Like this is just insane. Minimal movement, and then we slowly start to increase, but then decrease. It literally had a decade of no gains. Like, look at that, right? Obviously, it went from like 45 cents to $3. Yes, you made money, but ultimately, it wasn't much, right? So, and people were scared of the dot-com bubble crash. Now let's investigate. Let's investigate this, right? So if we investigate this and look at the revenue, you're seeing revenue going up, right? You're seeing revenue. Let me just go zoom in here. You're seeing revenue increasing, right? Let's look at net income. Net income you see increasing. Obviously a little dip here, but you're seeing it going up. Let's look at free cash flow. Free cash flow is a machine. It's growing. See how they were negative here, right? So ultimately, you could calculate the intrinsic value, and we can honestly do it right now. Now they have a lot of shares, but back in the day, let's calculate the intrinsic value. I mean, it's growing like 100%, right? I mean, now they're making 637 billion. Here is when they were making around 2-3 billion, kind of right around Clover's price, and you can see how it's dead, right? So let's go ahead and just go ahead here and open this up and go in and just open up the price target software and just go here, full screen, type in Amazon, but do some changes because obviously the share count back in the day, because the share count's not this anymore. The share count was actually so let's do this one here. No, let's do this share count.
7,900.
The free cash flow at the time was, let's say, 346.
346.
And then the growth rate was 100%. I mean, this thing's literally doubling, almost double. I mean, we can calculate if I have to. Yeah, so around like, let's say 40%. You calculate the price target of Amazon, and in 2003, it was trading, like we were like in the dollar. It was pretty much a dollar. So you change this, and you see that you could get a 700% return. The intrinsic value is $8.30. Now, of course, the stock wasn't financially responsive until it didn't hit the stock price until after the great financial crisis. Really at around 2011. So imagine it took like 10 years. Obviously, if you would have invested here when it dropped, then you would finally have gotten your 34 bagger, right? Obviously, you would have kept improving it, right? Now that was from 2000 to 2011. If you were to look at the stock from 1990 to 2000, we've done this before in an older video. We'll do it again. Stocks were financially responsible, and it was really cool because what ends up happening is, this is really interesting. I find this really interesting, guys. You calculate the intrinsic value in the 90s, and then within 2 years, within 1 year and a half, the stock goes to its intrinsic value, then it falls down. The stock goes to its intrinsic value, then it falls down. So the question you have to ask yourself is, who in the 90s understood, like that means someone in the 90s knew intrinsic value and the market was calculating it. Now, of course, retail investors, they didn't even have access to the market. They had to call in their broker, and they had to pay like $30-$40 a transaction, right? There was no Google, right? Imagine going back in time, where's Al Stock Trades? Al Stock Trades was a baby, right? Right? So Al Stock Trades wasn't existent. But Ray Dalio, in his 2-bedroom apartment, he had access to the little DDoS, whatever they have, the older computers. And in 1985, Excel was created, but only, who had internet, right? Who had a computer? It was too expensive. You remember when the plasma TV, the first one, was like $30,000-$40,000, I think over $100,000. Who the hell had this technology, right? So what I'm trying to tell you is, this information was not democratized. And even still, even though now your computers can handle the software and you can install, the software, you don't have to install anything. It's from your web browser, right? It's like logging, it's like going to CNN. That's pretty much what it is, and you get the data. So the point is, you can see how powerful understanding this information is. So let's go ahead now and let's use Humana. You do Humana, and there's no AI analysis. So you go in and you do extended history, and now you have some data. You go down here and you see how like now you have data from the past, so you can study this information. You can see how this information works, right? So the question now is someone is going to ask, well, Al, I don't want to wait 20 years. Well, listen, because now everyone has this information. In the 90s, for some reason, the market was efficient, but I think in 2000, when a lot of stocks came out, Wall Street was scared to invest, so innovation slowed down. Now capex is expending so fast in AI. And I think that Clover is going to reach its intrinsic value a lot faster than if they were in 2000. But you have to also understand this part of it. People did not have the technology that we have now. So the market is more efficient now. Does that make sense? So, so now that you know this, now let's look at this here, right? And let me just be clear. Let's open up this just so we understand the power of this. If we type in Clover right now, ladies and gentlemen, Clover just turned positive last year, 2024. So get ready. And you're already starting to see institutional ownership increase, right? I know it's hard to believe. I know because there's a lot of YouTubers out there that don't know what they're talking about and they put a sour taste in your mouth. I get it. Okay. But this is the real deal. Okay. Speak to any lifetime access member. They've seen what they've seen on the inside, right? They've seen this and they've used this and they've made a lot of money on this. For any lifetime members, if you want to chime in, please do. Okay. So now that you understand that, let's go ahead and look at Humana. So in 1998, Humana turned free cash flow. Sorry, in 1999, Humana turned well, first off, let me see. Because it looks like it was positive for quite some time. Then in 1998, it turned negative, and then 1999, it turned positive. So something happened, right? So in 1999, it turned positive, and then 2000, it turned positive for the net income. So let's see. So let's open up Humana, and let's look at 1999 and 2000. So we go here. So 1998 and 99, it wasn't good. So 1999 and 2000, right? So the stock prices was around here. It used to be higher, used to be $31, but it's because they turned negative in 1998. So they turned negative, so they dropped. So they pretty much dropped like half. They dropped by half and they continued to keep dropping. But then they turned positive both on the net income in 1999. So they turned positive here. As soon as they turned positive, they started going up to 14, $10, $12. You might ask yourself, then all of a sudden it going up to $65, $73. You might want to ask yourself, well, and then why was Humana going up and not Apple or right? Well, because remember or Amazon, right? Amazon, because the .com bubble crash, everyone was scared of tech. This was an insurance company, so people weren't scared of it. So now let me show you something crazy. Okay. So let's go ahead and take a look at this. So 1993, and for some reason Google is not showing you the historic data. It stops at 1993. Let me show you how powerful our data is. Our data goes back to 1990, even 1985, but yet Google doesn't even show you that. Right? You see how we show you more? This is again, I'm a data software platform. I sell data, but I understand the data is meaningless if you don't have a master teaching it to you. All right, so now that we know this, now let's go ahead and see if we can set the price target for, Humana. So Humana's free cash flow was around 414 on 073. So we could say around 350. So we're gonna make some changes. 350. We're gonna call it a 0 because we don't know the stock price what it was. We could call it. We call it 5, or we just call it 7. How about that? Shares outstanding back in the day. The shares were around. We could just calculate the value here, honestly. Shares were we'll use 157. They had more shares back then. And then growth rate will say 35%. So by doing this, you get an intrinsic value. This is 35%. This is 350. You get an intrinsic value of $300. You see how back in the day, back in the 90s, you're like, holy shit, this thing can turn into a $300 stock. You see how powerful that is? You see that? This was back in the 90s, okay? 90s. Now, let me see one thing here. $300, right? So let me see if I can do something here. If I can, because you can see here, it started to go up like insane amounts. And if we really want it to be respectful and grow them how they are growing, 58.65 minus 48.52 divided by 48.52, that's a 20%, 20.8%. And we can just kind of use this free cash flow. You know, we could just use this free cash flow here and do the math now, and you're getting 111. If we want, we can use the lower free cash flow. We can be very bearish, use 107 from 1991. You put 107 here, you do the value, and you get $33. You see how I'm going to listen. I'm about to blow your mind. You understand me? I'm about to take your mind and I'm about to blow it up. So just be careful because your mind is about to just, okay? Let me explain. If you're not listening right now, if you're not listening to what I'm telling you, you are doing your life a disservice. You're doing your wife a disservice. You're doing your children, your future children, a disservice. And frankly, you know, you're doing yourself a disservice. Please listen. Please listen. I beg you to listen. I want you to just ignore the TV, just tell your dentist to shut the hell up. Okay? All right? Listen. If you're flying a plane right now, put on autopilot. Just kidding. Don't imagine, right? Don't imagine. You see CNN, right? Listen. Okay? Please listen. Okay. Back. Let me go ahead and zoom in because we need to talk. Forget all this. This is the future. Forget the future. Pretend you're in 1991. We're in 1991 right now. Okay? In fact, here. Screw this. I'm going to take a freaking screenshot. I'm going to take a damn screenshot. I'm going to take a damn screenshot. Okay? This is all we got. This is all we have for Humana. This is all we have. 1990 and 1991. Free cash flow was 414, but it dropped to 107. As a humble investor, you are starting off. You just got your 1990 car. Clinton is president. I don't want to go any more further with Clinton, but you know where I was going, right? Clinton was doing his thing, right? America was beautiful. We were innocent. We just walked through TSA. Right? America's on the desk. America's on the desk. So I need you to listen here now. What's the growth rate between 4852 to 5865? How do you calculate that? Simple.
5,865.
You take this, subtract from this.
4,852.
You take this and you divide by, you take that and then you divide by, you take 10, then you take 1013 and divide by the original number. You get a growth rate of, multiply it by 100 because you need to turn it into a percent. You get a growth rate of 20.87. So we'll take 88. So now you know the growth rate. So what did we just do? We just took the growth rate of Humana from 1991. We're going to go ahead and put the growth rate here. We just put the growth rate. Okay. Forget the stock price. I'm going to put 0, right? I'm going to put 0. Don't even look at the stock price right now. So you know that I'm not bullshitting you. So you know there's no bullshit here. What's the outstanding shares? They went from 101 to 157. So we're going to use 157.
157.08.
There's your shares. Free cash flow, we're going to use the lower one, 107. Here's 107. Are you ready? I'm going to select update projections from 1991. You update projections, ladies and gentlemen, calculating intrinsic value, utilizing our proprietary intrinsic value calculation. You scroll down. What do you get, ladies and gentlemen? What is the bull case? Somebody type the bull case in the chat. What is the damn bull case? Type the damn bull case in the chat. I'm not going forward until someone types it in. Okay, good. Now someone go in. Someone take 34.17 plus 23.9 divided by 2. Take me the average between the bull and the base case. Give me the damn average. What is the average between the bull and the base case? Someone give me the average and put it in the damn chat before we go to Google and see the stock price. Put the damn average in the damn chat. That's incorrect. 23.90 plus 34.17. Exactly. 29 is the average. Excellent. Now let's go ahead. Good job. 29 is the average. The bull case is 34.17. Now let's go to the stock price. So here's Humana. See, that's Humana. There's no bullshit here. Here's Humana. Let's see what it does. We calculated it in 1990. What was the year? 1991. We calculate. Imagine if you knew me in 1991. Imagine if we were friends in I wasn't born. I wasn't here. But imagine if I was here. And imagine if you knew me in 1991. Imagine if we had YouTube. Imagine if you had the software in 1991. Let's see if I would have failed you or if I would have helped you. You wait. It's good. So what was that, like 7? I think it was at like $3-4, but let's call it 7. You wait. It's increasing. $12, $19, $20, $23, $24, $25. You're hitting close. $25, $27, $25, $22. You're waiting. $26, $30, $31. What does that tell you? It hit $31. And guess what? That's just using a 1991 analysis. Imagine if you would have looked at 1992, 1993, 1994. So B-Rad, that is incorrect. It's not a 10-year projection. we're shooting it up 10 years into the future, and we're discounting back into today's present value. So it's not like a 10-year projection. It's what the price should be at the time point. It's just, it took time for Wall Street to find it. So 7 years. I think Clover is going to be a lot faster because back then no one had access to this. But you can see how if you use that information, right? You could see how, because here's the thing. You should watch. Remember that video I did with the boxes? Remember that video I did with the boxes and I was drawing the boxes and we're shooting it out into the future and we were discounting it back? That's why we have a discount rate. We discount back at today's present value, right? So let me explain to you what that means very quickly for Clover Health. Okay. So now that we calculated this, let me calculate Clover Health's price target. Okay. So Clover Health, what was the average growth for Clover back in 2024? It was 9.33%. So you go ahead and hit CLOV. You're going to put 9.33%, and you're going to go ahead. The free cash flow was 33.29.
33.29.
And then actually, no, it was 80. It was 80 because that was discontinued. Remember, we had around 510 million shares. We're going to update projection. Look at the price target. So you're telling me in 10 years, Clover's going to be $3.40? No, B-Rad. That's not correct, right? It's what it should be worth now. Now, if you up this to where it is now, 37%, then yes, you're going to go ahead and see $24. But the Wall Street's scared that it can't grow that for 10 years. So we could say 23%. You could see now we're going to get to this price soon. And this is only 80 free cash flow. This is Clover when it's unprofitable. Imagine when it becomes profitable. So now you're starting to see the power of the software. The software is the data, and then it gives you the intrinsic value. You take the software and you put in the intrinsic value. Guess how much money you would have made in the 80s and 90s having this? Guess how much money you would have made if you would have done this? People thought Amazon was going to go broke, but they turned profitable, as you can see from the financial sheet. But no one knows how to read financial sheets. Let's see here.
I used to get data from the platforms like, yeah, so much click-throughs went down. The data. All stock trades changed the game.
There it is, Doug. I used to get the data from few platforms like Yahoo. So much click-through to run down the data. We take the data and we give it to you on a platter, and we have AI explain it to you in an easy to read language. Okay, so now that you see the power of this back in the 90s, and we should do more of these activities, right? I really like these, but let's zoom out here real quick. Let's just what's something that's good. Look at the share count. Let's look at the share count for Humana. So the share count went up, but then all of a sudden it started going down because they started buying back their shares. Let's look at Tesla. Extended history. Operating cash flow for Tesla turned positive in 2013. It was a signal. They all turned positive. So 2013 was a signal that should have showed you that Tesla was a good investment in 2013. So then, okay, that's fine. What was Tesla's price in 2013? In 2013, Tesla was $2.19. $2.19. Are you starting to see the power of what we're doing? Are you starting to see this? This is not a game, ladies and gentlemen. Wall Street hates me. They don't want me to show you this. I just can't look at myself when I have all this money, golf courses, millions of dollars, a beach house in California, and soon a beautiful condo in Miami. I can't enjoy this like just thinking about people just not like imagine enjoying all this and me taking the Hippocratic oath and me saying that I believe in helping patients and all this stuff they make us say. When I have a way to make money, I have a way that has taken me from homelessness to where I am now, because I know I know that if you have more money, you're going to be able to eat healthier. You're going to be able to enjoy your life. I can't live with myself. Now, when I'm in the presidential suite, staring down at the world, beautiful ocean, smelling the water, hit the sand, I know I'm like, you know what? There's people out there that are calculating intrinsic value. There are people out there that are getting richer. And my platform had a small piece into it. Now that is legacy. That is legacy. That's why I stayed up last night to program this, to code this, to give this to you. That is legacy. Now, for Clover Health, let me show you. We got something really cool now. You hit the quarterly now, fetch the data, and now you hit enhanced AI analysis. Now it looks from Q1, it compares it to last year's Q1. So you could see revenue went up 33.27%. You see that? It tells you revenue went up 33.27, and you know it went up, right? Because we did a video about it. But let's say if revenue next year is 33%, is it going to tell you? No, it's not going to tell you. Why? Because the Z-score, it won't be significant. This is 7.57 standard deviations above the mean. So the revenue went up 7 standard deviations above. You understand what I'm saying? Revenue increased 7 standard deviations. You could almost do that to the stock price and you'll get around $20 plus. Look up the gross margins, up 270%, 13 standard deviations above the mean. Operating income increased 94%, 1.25 standard deviations above the mean. Operating margins increased 95%. Net income increased 93%. Earnings per share increased 93%. Shares increased by a little, 2.2%. Book value increased by 12.44, right? Because now the book value is around 68 cents. Yes, the minor drop because they used cash to pay off the taxes rather than selling their shares. Operating cash flow dropped. Uh-oh. CapEx spending dropped. That's good. But free cash flow dropped. Uh-oh. Uh-oh. Spaghetti-O pizza. Why? Why did it drop? We've done the calculation. We've done the work because they spent 18.2 million buying back their shares. They also spent another 13 million of cash instead of their treasury stock to sell it to essentially pay taxes. Remember I told you they used cash instead? That explains the free cash flow drop. If they didn't have that, they would have been free cash flow positive. Oh, unpaid claims, that too. So you see how you can, if you can't answer the negative, then that's bad. But you talk to AMC people, folks, they don't know. They just don't know. There's people that buy Palantir and they don't even understand Palantir, right? I know a neurosurgeon that got Palantir at like $2 or $3. You're like wondering how the hell did he get Palantir at $2 and $3? Because he got shares before it IPO'd. Yes, you can do that. Yes, you can do that, right? He's a neurosurgeon in Tennessee, right? So there's ways, right? Okay. Al, what do you think value should be right now? Any ideas? Well, I mean, we could calculate the value. It's just right now I'm staying away because if it's fraud, then you don't know if these numbers are real. So if like kind of garbage in, garbage out. But if you were to look at the numbers and if they are real, $500 plus, right? But you have to assume the numbers are real. What happens if they can't upcode anymore, right? So the lovely green and black terminal is on the lifetime, not monthly. SK, that is correct. And let me take a moment because I, have a couple questions. So I need you to guys listen to this too. Okay. So if you go to the Al Stock Trades platform here, and if you go here, you have 3 choices. You have the stock terminal. The stock terminal is the basic version. The mastering and bundle lifetime includes the basic and it includes the advanced. What is the advanced? This is the advanced. This is the advanced. So What is the basic though? What is the basic? Let me explain to you the basic. This is the basic. This information. It gives you the unusual options activity. Let me explain to you what else is the basic. This is the basic here. All this algo flow showing. See how algo flow is very accurate? It showed that it's going up. What happened to the stock price today? Well, we became pretty damn well. And by the way, now what Wall Street's going to do, just like if you haven't recalled, Roaring Kitty, our views are going up. What they're doing now is you're going to start seeing a depreciation in stock price, right? You're going to start seeing that game. They're going to drop the stock price heavy because they want you to sell. Okay, they want you to sell. So, but you could see today was a really green day because that algo flow is up, right? They can't mess with us because if I have about 100, I have over 150 ways of analyzing a company. They can't cut all those ways. You can't legally. You just can't. You can't cut intrinsic value. We're untouchable, right? Unless they hire someone to, right? You never know, right? But it's okay. I can take that risk because you should see the arsenal that I have, right? I'm from Arizona, born, raised, wild, wild west, right? So, right? Yes. Okay. So it includes the terminal, basic terminal, which is all this information, right? All this data. It includes all this data, and it includes our brain machine as well. So this is the whatever's on you see here is included on the monthly, but also included on the lifetime. What's not included on the lifetime is this information, the advanced stock terminal. This is included in this package and in this package. One-time payment, lifetime access. And guess what? You also get lifetime access to this one. So these here include lifetime access to everything. Now, very quickly, for folks that are in, to see what the basic looks like, this is the detailed stock terminal commands for the basic stock terminal. You click on that. These are the stock terminal commands. This is everything you have access to on the basic stock terminal. Do you see this? Do you see this? And if you click on this, it'll show you what that is, how it looks like. Look at this. These are over 2.5 billion outputs. I'm still scrolling. I haven't stopped. You see all this data? That's just on the Discord. That's not including, this is the auto posting stuff. These are your golden sweeps. Unusual large sweeps with premiums worth over $1 million. That was the one for United, but it was a freaking put. They were shorting the market and it happened before the fraud charges, right? Lifetime access to all this. Look at all this. So this includes, this is all of this. This right here and this one here includes everything that you see on this page, but also includes this, our beautiful, most expensive premium stock terminal that calculates the intrinsic value. I almost want to feel it. Look at that. Every time I touch it, I just get more power. Oh, look at that. Right? I'm a big nerd. Like this guy's literally groping his data. I'm literally groping my data. I mean, let's be honest. This is what's going to make you rich, right? I mean, it is what it is, right? Yeah, pretty much just get the bundle. It's the way. And you know what's crazy? You can use a firm, right? You can use a firm to, so if you click on the bundle here, so you unlock the full arsenal, and these prices will be going up. So you go to a firm, yeah, it's $4,000, but check this out. For a limited time right now, take advantage. You put in SAAS, and you hit it, and then you get $1,200 off. Then you go click on a firm here or PayPal, and then you can be able to take this and turn it into a monthly, right? You can see how you can turn it into monthly, right? I'm going to buy the premium model. You already have the premium model, right? Bam, $1,200 off. You already have the premium. Are you talking about the generative AI? Yeah, that one's good too. Let's see here. Al, you have cash. Buy a vest. We need you, buddy. No, I know. Seriously, though, I need to buy a vest. Right? Jesus Christ. I'm telling you guys, the information that I'm sharing with you, they don't want you to know. I'm telling you guys, this is the heart and soul of Wall Street. They don't want you to know this. Okay? Trust me. Like, not even Obama, who I look up to, has over millions of dollars. Take a 5-minute video, pal. Go on freaking YouTube. Take a 5-minute video. Talk about this information. Didn't you muster your way through the great financial crisis? You know Wall Street pretty damn well. You can't make a 5-minute video. Make a 5-minute damn video to talk about how to calculate intrinsic value. You can't use your influence. Enjoy your beach in Lanikai. Enjoy, right? People don't care, dude. Right? Once people make their millions, it's over. It's done. Yeah, I'm done. I'm rich. Screw everybody. But that's not where real happiness comes from. I grew up with no family. I want to be able to create lifetime access community where we all can come together, enjoy yachts. I want to be like those people in Miami, have these expensive yachts, come in the dock, just dancing, and people are like, "What do you guys do for a living?" And I want us to say we calculate intrinsic value, right? Right? The intrinsic value gang, right? What was Al Stock Trades Terminal Day 1 missed? Which one? Day 1? Oh, Al, yeah, that's the algo flow by Helmet. Protect that brain. Certainly do. Yeah, I need to. I was trying to capture market share. So funny. Is the advanced terminal available? So the only way to get the advanced terminal is to use Affirm or PayPal. We do not use monthly subscriptions for the lifetime access because it'll just screw up how we invest in our members. When people become lifetime access members, I take them from 0 to hero, right? You guys have access to me 24/7. You can message me on the Discord and the chats, and you can speak to the stock terminal members and the lifetime access members. They'll tell you I'm very responsive, and it requires a lot of investment. So we want to make sure the right people come in, the people that are interested in wanting to change their lives and interested in wanting to learn the material, but most importantly, being able to contribute, right? It'll be rad. 24/7 is the truth. Dude does not sleep. I mean, I could show you here. I mean, let me show you. I'm not proud of it, guys. I mean, it's not good. I'm not proud of it, but let me share with you here. So if we go here, guys, let's see here. So this was yesterday at 9:31 in the morning. This message was yesterday at 2:25 p.m. This message was yesterday at 10:46 p.m. This message was I guess this morning at 1:06 a.m. This message was this morning at 4:02 a.m. I mean, you see, I'm up 24/7, guys. I mean, like I sleep a little, right? But I have a mission, right? I'm really trying to build this out for you guys. Then at 5:22 a.m., I'm like, damn, I'm trying to teach these people how. Maybe if I give them cartoons, they might understand. And everyone started laughing, right? So 5:22 a.m. Then here we are back at 12:33, right? He slept from 3 a.m. to 4 a.m. Right? And then let's see here. Answers private messages within a day, if not in a couple hours. There it is, right? The data costs money regardless. Who are you going to pay for Al Stock Trades, not Yahoo Finance? Well, that's what I'm saying, right? And Yahoo Finance data sucks, right? Tweet at 3 a.m. like Trump. No, the thing is, guys, I know, like, it may, to you guys, it may seem like, what is this guy doing? He's crazy. Like, what's this guy doing? He's just, but the thing is, guys, listen, if you're passionate about something, And if you love something, this is not a job. I'm I'm an artist. I think of myself as like a modern day Picasso, right? I know that sounds like, oh my God, this guy's full of himself. No, for real. Like, listen, hear me out. Hear me out. Like, like, like I'm having fun. I'm like, look at this. I'm just like, it's like me. I'm painting, but I'm painting through code. I'm like coding this. I'm like, let's add this. Let's add this. I take the paint, I toss it, right? I just and I just kind of like build all this, and I love it. I love it because and then I get so excited. I'm like, oh, I can't wait to share this with them, right? And then I give you guys a long message. Oh, I'm so happy to announce this. And sometimes I may do my announcements at 2 a.m. in the morning. I might say, my apologies. Sometimes I forget what time it is, and I tag you guys. So some people are woken up in the middle of the morning, right? Like one big happy family at Thanksgiving, but do not bring up politics. Yeah. Save that for the political channel, right? We love each other so much, but when we're in the political channel, we're like we're just right. The truth, exactly, right? The political channel, holy shit, man. It's like WWF SmackDown, but it's real, right? Reminds me of the weatherman reaching for the screen, reaching for intrinsic value. Yeah, let me go ahead and get that. Let me go ahead and get. I should do some magic trick. I should like somehow like let like a $100 bill come out. I'm like, look at that. You see this here? Pull it out. That'd be so cool. But yeah, no, I'm having fun. This is fun. And here's the thing, guys. And you want someone who's obsessed, right? You need someone who's obsessed with this stuff. Because you really, it's hard to have a master to teach this stuff. You really need to master it. And it takes time. Also, and you get access to the community. Our community with a 30% response rate, they've answered how much money they have just in one company. They have about, I'm sure the net worth is higher, but altogether we have about $45 million in net worth, right? And this will soon become $1 billion, and that's why lifetime access will go up. It'll be expensive, $25K, $30K. Then after that, once we build our team, then right, it's gonna be crazy. Let's see here. I love to get terminal, but I'll get banned for being out of pocket with my woke politics. Actually, okay. So here's the thing, guys. Okay. So to answer your free Palestine, do you understand that my significant other, she's Palestinian, right? Now I'm a bit of a weird person. So my mom's Jewish and my dad is Greek Orthodox, right? So, he's Greek Orthodox, right? We don't have the best relationship, unfortunately, right? I don't know him, as you guys know, or my story, right? So, my father, he's a Greek Orthodox, and my mom's Jew. Obviously, I identify as Catholic, right? But it doesn't mean I don't embrace the Jewish culture. I love the Jewish culture. Benjamin Graham is Jewish, right? Bill Ackman is Jewish, right? Look at the Jewish culture teaching about finance, right? Because they were pushed away from all parts of doing business. So they said, okay, fine, we'll just master this, speaking about Palestine, oh, you Jewish as well? Well, yeah, and we've had someone on our terminal who did some, crazy comments about Jewish. And I'm like, hey, do you know I'm Jewish? And everyone started laughing. At the end of the day, we're all a family. We say some crazy shit, but at the end of the day, it's no matter if you're Jewish, Palestine, freedom of speech is number one. Because I'm American, right? Freedom of speech is number one. Now, of course, if your freedom of speech starts to interfere with someone's rights, like if you start saying, I'm going to go, actually, no, I kind of let that slide too. I'm going to go kick your butt, right? Well, actually, someone did say that as a joke, right? As a joke. If I'm talking about pro, right? Right? Well, someone did say that though, right? Like, the whole point is we're family. I even made a meme out of it, right? Again, the whole point is we're here to have fun, but we're also here to push each other and hold each other accountable. And if you can't handle that, then this platform is not for you, right? B-Rad. I mean, this platform, Like, we'll call you out. You make a mistake, we're going to put your feet to the fire, because again, we can't afford to make mistakes. We have to be cautious, right? We have to be cautious because we got money in the line, right? Let's see. Let's see. I'm getting my family out of poverty because of Al. And that makes me so happy, right? You know, like that's what any doctor, future doctor, any doctor would want, but they can't because they don't know anything about money, sadly, right? Right, Jews as well, right? And that's the thing. It's imagine bringing, and we got Christians, we got Arabs, we got Muslims, we got Jews, we got them all on our platform. We got them all. If the world can't behave, then screw the world. Our platform is the place where we can all come together and love each other. Just the only caveat is the damn political channel. There's a lot of hate on that damn channel, right? That channel. Get out of that channel. You go in, they're gonna drag you. Like, come here, ma. Come. Did you know about this? I go in, I go in, and I go out. I go in, post a link, and I get out. Right? Say it, but don't hate it. Exactly. Right? Al, if you don't mind sharing, how long did it take? Yeah, it took a long time, guys. I mean, to build up. And again, I'm just showing you the $1 million. There's a bigger portfolio, but it's shared between me and my significant other. She's more private. Right, but that's a bigger portfolio. It's taken me 14, 15 years, guys. It's a lot. But the thing is, I didn't know this information. I didn't wake up my first year of the stock market and say intrinsic value. I didn't understand that. Right? I used to go on. You know how you guys have stock twits? There was once upon a time Yahoo Finance conversations. I mean, I'm sure you could still see them. Let me show you. I'm sure they're still active. I used to go down Yahoo. In fact, the former owner of Whole Foods got sued because he was spamming the chat boards. Let me see. Whole Foods owner sued Yahoo Finance chat board stocks. Yeah, it's so funny. This guy got sued because he had okay, this is so funny. This guy was a degenerate. The former owner of Whole Foods, the CEO, and his stock message board obsession. So what he used to do is his name was Rahabadeb, such a degenerate, went online to Yahoo stock market forum, and he said no company would want to buy wild oats and natural. So what he did is he tried to trash the stock, and the stock, I guess, fell and it dipped, and I think the Whole Foods bought out, and then they got sued, and he had to pay a fine. What a degenerate, right? But yeah. So I used to go on the chat boards here on the community, and I'm sure there's people probably still here, right? There's 7 minutes ago, down big after hours, Moody downgrade US. So this guy's commenting on Clover, while retail CLOV investors were dumping shares. You see this? So there's people on here talking about. There's still people talking. Holy crap! It's still alive. So anywho, the point to answer your question is, I used to go on these chat boards, and someone used to say this company is going to crash. I sell. I used to be scared because I didn't know. I didn't understand this. Right? It was before I read The Intelligent Investor. So then I started reading and educating, and then right. So, but the thing is, people that join our platform within 1 hour, they start calculating intrinsic value. We make it easy. Let me think. Okay. Oh boy, let me see.
Believe it or not, I made my first million with my first ever investment in Tesla using 30K off from looking basics, but I learned a lot. More watching out videos.
There it is. Yeah, believe it or not, I made my first million by investment 30K. That's all. And that's all it takes sometimes. Exactly. Learning the basics. And I've learned a lot from watching Al's videos. Absolutely. Because we teach you the real deal. This is the real deal. Make sure I get all the comments. I'm a chameleon. Since nobody ever knows what I am, they ask me, what are you? And I say, whatever I need to be, so you don't discriminate. And that's the thing. We should all love each other. We should all love each other. And that's kind of like my philosophy, right? Al, did you always diversify or make a big? So I went ahead and I did diversify, but I found stocks that were undervalued. That's how I made my money, right? Right. You used to troll on stock tweets all the time. Yeah, that's so fun. No, but I know, but like honestly, I'm kind of surprised that Yahoo Finance is still kicking. There's people that are active. Whoa. I mean, they're saying some good stuff here. 26% ownership, Morgan. Oh wait a minute. Wait a minute. Look at this. Made millions. Morgan Stanley. So you know what they did? Where do they get this post from? Doesn't this look familiar? Holy crap. I posted this. It's got like 548 views only. I posted this and this guy posted it here. This guy posted it. Holy crap. You know what's crazy? Who would have known? I started from nothing. And I started like a degenerate on this Yahoo Finance boards to where I'm able to publish something and someone posts it on these same boards. God bless America. Holy crap, right? That is freaking cool, dude. And that's what it's all about. Taking your ideas, sharing them so other people can build upon it. So that damn you Bank of America can't trick us, right? So, all right, so let's see. Where do I need to go now on this tabs? Oh, okay. All right, so because this is an hour and 37-minute live, I'm going to go ahead and I'm going to play this video. And then from there, we'll call it quits. And then we're going to bring out the iPad on the next videos. But I just wanted to go ahead and talk about that. Well, before I open up the video, let me open up the market sentiment intelligence. Didn't I tell you regarding my software? Didn't I tell you that Clover's about to go up and you can see it went from bearish to going up? So I think we're about to basically ride to the sky, right? So we have that. The other thing I want to basically do is I want to, this lady really, she's annoying. This lady here, I'm a bit hard on her, but I should not apologize. I'm upset at this lady, and I'm gonna explain to you why. Let me share. Go ahead and watch.
Joining me to discuss is Mike Desjardins. He's the CEO of Anomaly, which is a healthcare software company streamlining payments between providers, payers, and patients. It's great to see you.
You're talking about software? What about us? We have a software too.
Again.
Great to see you as well. Thanks.
And I'm glad we've pointed out that there's some industry-wide stuff going on here. Humana shares are also languishing.
Yes.
No one in this space seems to quite have the tailwind behind them that they once did.
That pissed me off. I'm not even going to watch the full video. And this guy's like, we're trying to compete against Humana and United. We're doing that too. But you see what she just said? I'm going to repeat what she just said. She just that comment pissed me off. Listen.
In this space seems to quite have the tailwind behind them. None shares are also languishing.
Yes.
No one in this space seems to quite have the tailwind behind them that they once did. Is it all about Medicare Advantage, and is it all about maybe unwinding a program?
Are you serious? Did you hear what she just said?
Streamlining.
Did you? Let me pull up the transcripts. Pull up the transcripts. Where are the transcripts at? Or you know what? She doesn't even read it. It's fine.
Payments in 25 years advantage and did quite have the tailwind behind them that they once did. Is it all about Medicare? Industry-wide stuff going on here. Humana shares are also languishing.
Yes.
No one in this space seems to quite have the
No one in this space seems to quite have the ballot. Yeah, okay. This is not an election. Trump already won.
The tailwind behind them that they once did. Is it all?
You see what she just said? Why can't I zoom in? Look what she says. Where is it? It's at 26. Look what she says. No one in this space seems to quite have a tailwind behind them. She's pretty much saying nobody in the whole Medicare Advantage space is having a tailwind. Tailwind means good, like being pushed. You want to be pushed by your tail, not by the head, right? So tailwind. So she's saying that nobody's doing good in Medicare Advantage. Are you stupid? Are you stupid? Clover Health is doing good. Industry leading MCR. Nobody is doing good. It's because they want your shares. Don't you get it? They want your shares. They bring this freaking guy. They bring this guy. They bring this freaking guy like an expert. Who the hell is this guy? They bring this guy. I don't know who the hell this guy is. They bring this guy to talk about software. Is he even a computer scientist from Harvard? At least freaking Andrew Toy got his master's and bachelor's from Stanford. Are you kidding me? Don't get me started. Don't get me started. Jesus Christ. I watched one of your lives from a year ago this afternoon. Love the growth you made in front of the camera. No, I appreciate it. Honestly, guys, because the thing is, I was trying to be very nice. And I was like, you know what, man? I'm done. I'm going to teach how I normally teach. And this is how I teach. This is what got me this. If you look at who I am in the news, and I've taught thousands of people, this is how I teach, right? I'm rugged. I'm bare bones. I teach like that. That's how I teach, right? If I can't help you, I will grab you by your neck and I will literally bring you where you need to be, right? That's like again, I have some Italian in me, right? I have like an East Coast, right? I was like, hey, take it, hey, come here, right? And I'll bring you where you need to be, right? Because the thing is, this knowledge will literally save you so much money. It's a GPS. It's a freaking GPS. It saves you so much. Okay. So anyway, I love you all. We're gonna go ahead and do the iPad later. I'm gonna go work out. I got a nice, by the way, little desk system here. In Phoenix, I already have one in Tucson. So we're moving up in the world. Made some nice stuff here for the business, so we can invest more in our lifetime members. But yeah, that's it. We're doing pretty good. You can see here, like I told you, you see how it's dropping? You see how it's dropping? They're going to try play games with you. Okay? They're going to try to play games. But let me tell you something. Okay? Let me tell you something. You're going to try play games, but what they can't play with you is Q2 when it becomes profitable. They can't play with you next year when they're being paid at 4 stars and when they get an effective rate increase at 9%. They can't play with you. They're going to try, but they can't. They can't. You're going to see this portfolio grow. And for all our members, yes, we will be doing morning lives in the Zoom call. We're going to have that in the future because we're going to be doing the wheel strategy every week. So we're going to need to know how to make money. We're going to enjoy. What does it say, Al?
L9, your mission.
Let's see here. So it's Hebrew. It means toast, meaning to life. And it means Yiddish. It's integrity and honor. Calling someone is a big compliment. It means a kind and decent person. Excellent. And we're going to get that 14% next year payment. Whoa. Like I told you, more net income, right? Watch. Let me explain. Okay. More revenue, right? More revenue, profitable business, MCR, 500 basis points year one reduction, 700 basis points year one. Yeah. 700 basis point reduction year one, 800 basis point reduction year two, according to Kevin, right? So revenue, right, goes up, right? Profits, net income goes up. Net income goes to free cash flow, which goes to our intrinsic value. We make more money. Next year, they grow more, right? In the whole, it's a wheels. It is a wheel strategy, right? All right. I'm off to the bank. To the bank. I'm so tired. I'm off to the gym. Okay. Love you all. God bless you all. Right. We expect a hot tub video in Discord. Ooh, everything off. I'm just kidding. Right. Honestly, I should. Oh yeah, tonight looks like a hot tub night. Ooh, nice hot tub and a massage. I'm gonna get a massage. I'm gonna get a massage first, and I'm gonna get a hot tub. Right? Because you work hard, you play hard. Right? As you can see, guys, when you have lifetime members telling you, get off, go to the damn gym, you can honestly see how much I'm investing. I'm giving this everything I got, right? Because I really think the stock is about to blow up, and I really want to make sure everything is there, everything we're ready. Because the problem is I'm building something from scratch, and we have no competitors, right? Because no one's doing it all, and that's the task I took. Right? Love your energy and knowledge. Drink some decaf coffee. Yeah, I know, right? This is double concentrate. Whoa, you can't even see the cup. See that? That's weird. You can't even see the cup. It's like a magic trick. Look at that. It's such a weird magic trick. Like if I cover this up and if I like cover this, if I do this, it's like a magic, could be a magic trick. No, I don't know what I'm doing. I don't know. Never mind. I'm too tired, guys. I need to go to sleep. Okay. All right. Gym time, massage, hot tub. I'll see you on the next one. Let's see here. Let's do this one.
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong.